Next, please welcome to the stage Vice President at the European Investment Bank, Ambroise Fayolle, Special Envoy to the President of the African Development Bank for the Alliance for Green Infrastructure in Africa, Amadou Hott, Emeritus Professor at Gresham College, and Special Envoy to the Prime Minister of Barbados on Investment and Financial Services, Professor Avinash Persaud, and CEO of Development Reimagined and Senior Non-Resident Fellow at the Center for Strategic and International Studies, Ryder, for a conversation on reforming financial systems for climate equity.
There's so much that has been said already and so much we can build upon. I'd like to start off with you, Amadou, and there was a reference previously to the very important work that's being done by the African Development Bank. And so I'd like to turn to you first to build off what has been said and also to understand from your perspective as you're thinking about the prioritization of finance, resource allocation, and as it relates to a just transition, how are you prioritizing your work and the work of the bank?
Thank you very much, Alison. Great pleasure to be here. Just a couple of points. One is where Richard left it on SDRs, reallocation or rechanneling to MDBs. Extremely important, low-hanging fruit. It doesn't cost much to donor countries because it does not affect at all their budgets, doesn't affect their debt levels. It's quote free money almost, like he explained. So if MDBs get those SDRs, they can leverage to up to four times. You get 20 billion, it's 80 billion. The FDB has done a lot of work with the IMF to make sure that that worry that the asset should still remain a reserve, has a reserve status, has been resolved more or less. So it's now political will. We need 5 countries to accept to donate so we can start the process. What does it do? It allows the bank to take more risk because you're getting tier 2 capital. You can take more risk by investing more with the private sector in green infrastructure, in energy projects, and so on and so forth. What does it do as well is it enables the bank to lend money more to governments so that those governments don't go to the Eurobond market where today the coupon that you're paying for even a 7-year loan for most of these countries, you'll be paying 8-9%. If you want a longer tenors, you'll be paying more. So this is one point. And the second point for me, the priority is really to work on developing, preparing more bankable green infrastructure projects. Because if you have the project financiers lined up, whether they want to invest equity or debt, but you don't have assets, projects that are bankable, then we are not going anywhere. Today, when you have a bankable project, everybody is running behind you to be part of the deal. All the MDBs will run after a good deal today because having a good deal, a bankable transaction, is very rare. Thank you very much.
Thank you for that, and I'd love to dive into what more can be done to build that pipeline and what's needed, if you wouldn't mind picking up on that quickly.
Absolutely. This is what the African Development Bank is doing with the Alliance for Green Infrastructure in Africa, which I'm championing at the bank, trying to raise $500 million with $100 million of project preparation facility to support the governments to come up with the right strategy, the right planning, and the pre-feasibility work that needs to be done so you can extract a list of projects that the private sector should develop, but the private sector does not want to risk too much money on project development because it's very expensive. 1 out of 2 in general of project development project fails. So a private sector entity wouldn't want to spend too much money because of the risk. So the bank is coming up with a facility of $400 million, blended finance. We'll have a grant, junior equity, senior equity, where we will have we'll have MDBs to come in as commercial investors, philanthropy to come in on the grant side, or even some governments. We have some European governments. One of them has even told us to make it public. France, for example, will come in with a good amount in terms of grant for the blended finance vehicle and for the technical assistant vehicle. And other governments are looking at this. MDBs are looking at this. Philanthropies are looking at this. And we are hoping to do a big signing at COP in December in Dubai for 200 to 250 out of the 500, and do a first close in first quarter next year or second quarter, and start to develop that pipeline of projects that have been already identified. And these are impactful projects, fairly large transactions. We see so far very small deals. They're very important because you need to show the demonstration effect, but having big size transactions will have the big impact on the race to net zero.
Thank you for that. And Avinash, I'd like to turn to you to pick up on the comments that were just made, and also to provide your perspective on certainly the just transition. And the Bridgetown Initiative was referenced earlier, that focuses on both debt sustainability and investment and resilience. And so picking up on the comments that were just made, and also the conversations that you've been having this week, can you share some insights about what are some mechanisms that are working and advancements that are being made along the lines of and advancing the Bridgetown Initiative, but also what still needs to be done?
So I represent a climate vulnerable developing country. The problem we face is not that anyone out there saying that they want an unjust transition. Everyone is saying they want a just transition. But the problem is that the system we're working in has structurally and built-in inequities and injustice. And that means that trying to do the same thing that we do in developed economies and developing countries is actually often building in a lack of justice in this transition. And I want to exclude from my comments here what the African Development Bank is doing, because they are one of the pioneers and leaders and most innovative of all of the development banks in the world. And I can say this because I have no connection whatsoever with them. And as a developing country person, we're immensely proud of what the African Development Bank is doing. They're leading on SDRs, way ahead of the World Bank and the IDB and others. But they're working within a system that's it's got these built-in fundamental problems. Let me describe it very, very briefly. We have an international financial system in which only a small number of currencies are defined as safe currencies. And it's not because they are safe. They actually have pretty lousy fundamentals, the United States of America and Europe. 100 countries have better economic fundamentals than those two countries, but they are defined by law, by regulation, by accounting principles, as owners of safe assets. And when you're in a crisis, everyone flees to safe assets. And so their interest rates fall and their currencies strengthen, and they suddenly have lots of policy space. They can respond with expanding fiscal policy, expanding monetary policy, spending more, lowering interest rates. In Africa and in the Caribbean and in everywhere else in the developing world, when the crisis hits and all of money is fleeing to the safe assets, our currencies are plunging, our reserves are plunging, our interest rates are soaring. We have no policy space. We've got to collapse that. We've got to stop spending. We've got to reduce our monetary policy. And that's the world we live in. That's why the cost of capital in developing countries is so much higher. So when people say, oh, we must make this transition, and the Europeans are annoyed that the ambition isn't strong enough at COP, we say ambition without finance, ambition without low-cost finance is empty ambition. Because for us to make the same transition, it is actually going to reduce our growth. Because yes, the green transformation is the best industrial strategy for developed countries, because at their cost of capital, that transformation will boost jobs, it will boost investment. For our countries, the scale of the investment required, the cost of the capital, because all of this transition is highly capital cost. Building solar farms, the operating costs are low. It's the capital cost. for us, that capital cost, if we were to try and meet the same green transformation at the same pace and scale, will lead to a lower cost. So my final point would be that we're dealing in countries where if we slow our growth and slow our development, that's a huge impact on the poor. Most of our countries, our people are 2 wage packets or 1 wage packet away from poverty. And of course, the reason why we need to make this transition, and we need to make it a just transition, is although the whole world is being impacted, climate change is a window on poverty and inequality. It is the poorest who are the most vulnerable, who suffer the most, and that's why we need to really accelerate this mitigation in the world.
Thank you for that, and said with incredible poignancy and clarity, and also underscoring the urgency. I'd like to pick up on that point about the cost of capital and turn to you, Ambroise, in just a moment. But first I'm going to turn to Hannah. I'm curious from your perspective, and in light of the dynamics that Avinash just described, you're focusing on development reimagined. Clearly the system needs to change. So when you're thinking about these dynamics and the inequities that have been embedded in many of the institutions and the way the international monetary system is operating, what are you thinking about in terms of what needs to happen in terms of that reimagination?
Well, number one, it's not just one thing. There's so many aspects of the system that really need to shift. I'll give you, again, just some extra, a different way of understanding this. You take a country like Kenya. Kenya is where I was born. We need to be spent, in order to meet the SDGs, and that's, the basic entitlement, right? Every kid gets internet access, which they should have. Every kid gets water, electricity. In order to do that, Kenya needs to be spending 14 to 21 billion US dollars a year. Senegal needs to be spending 6 to 8 billion US dollars a year. That, for Kenya, spending that amount of money would take 14 to 21% of our GDP every year. For Senegal, it would take about 25% to 30% of your GDP to be spending that much. And of course, you're never going to be able to do that. You'd be going over debt ceilings. The IMF would be extremely unhappy if you're doing that, especially, and there's no way you can raise that through taxes. Our people are poor. Lots of them are poor. So a system that does not allow for that kind of spending, forget the extra stuff that we need to do in terms of industrialization, in terms of also the green transition, building renewable energy instead of using fossil fuel energy that might just be much more easily accessible and cheaper. Doing that is going to be much more challenging. It's going to add extra costs. And I think that's the fundamental frustration with the system. There are so many aspects of it that are just not focused on the right scale. And part of that, there's so much that needs to be undone. It's how we deal with the debt frameworks. It's how we deal with how we even syndicate. We syndicate having creditors coming in together, right? For projects or for new types of activities, or multilateral development banks have lots of creditors coming together. We should be having lots of borrowers coming together. That would make things a lot cheaper. There's a whole range of different solutions, but at the moment we are stuck in a very, very difficult, unwieldy. Bridgetown Initiative has had to work so hard, everyone working on it has to work so hard to bring in just some clauses. And that's only at the moment for new clauses for new finance, as opposed and new contracts that are going out, whether it's multilaterals or private sector. We're not even looking at it retroactively, not yet anyway, and there's some who are thinking about that. AFDB had to work very hard in order to create this new system for special drawing rights. Every single step is just too small to really deliver the real scale that we really need. That's why we reimagine. That's why we work with governments and private sector as well to do that.
Thank you. And I'd like to turn to you, Ambroise, and based on what's been already said, and thinking about these dynamics and challenges from the European Investment Bank, and also your increasing focus on climate-related investment and support for financing mechanisms to that end, how are you thinking about these challenges and the reforms that need to be made to more efficiently allocate capital?
Well, this is really a difficult question. The work that is ongoing in the multilateral development community, especially since the arrival of Ajay Banga, is something that is a game changer for the work we do in terms of working more together, in terms of having the right instruments and to change actually the way we implement the instruments for more leverage, for example. These kind of things that's going to help the volume, and volume is very important. We need, by doing that, to make sure that we preserve what is the best asset of our institutions, which is our AAA. Because this is because we have a AAA that we can borrow very cheap, very long, and transfer that to the projects or to the sectors that we finance. So I think there are really changes, and I would rather prefer to be encouraged to continue on this path than to be always told, okay, this is not enough, this is not going to happen, this is a drop in the ocean. Because at the end of the day, I don't think this is a drop in the ocean. I think really what we are doing in terms of increasing financing, sensitizing people and policymakers on principles for nature, for biodiversity, for having much more programs on climate, etc. This is something that matters a lot. And actually, what we try to do at the EIB is to implement that, especially with a special focus on least developed countries, on small islands, on those who are the most vulnerable, basically. And this is also related to the just transition, because just transition is also something that you need to see in conjunction with with adaptation. Just transition is not only something that you do, as we did actually, we did not well in Europe to close the mines. This is something that is affecting in particular the poor people, in particular in Africa, which have nothing to do with closing mines or etc. And that's adaptation. So what we call that at EIB is the just resilience. Just transition, just resilience have to go pair in pair.
Alison, can I explain how it will happen?
Yes, I would love
Okay,
that.
so
Please do.
in 3 steps. So what is the problem we're trying to solve? We're trying to solve that we have a system where it is lots of shocks, increasing shocks. Climate change is adding to those shocks. And the countries are unable to manage these shocks, so they end up with increasing amounts of debt. High cost debt, and because it's high cost, the debt adds to debt. And we're not getting the flow of private sector money because of this cost of capital is very high. That's the problem we have to solve. So the first thing we're trying to do is make the system more shock absorbing. So we are saying that every debt instrument should have pause clauses, where when a natural disaster hits, there's a 2-year suspension of interest and principal added back on later, so no one's losing any money. Creditors or borrowers is not a piece of insurance, it's just changing the times. So you've got the multilateral development banks have already agreed to do it. We have them in all of our bonds, and we need to now work on getting the private sector to put it in all of their bonds. The second thing we need to do is SDRs provide liquidity. We've talked about that. We need to rechannel even more. They pledged $100 billion, but they issued $650 billion. Let's have another $100 billion to be rechanneled. The third thing is building resilience. The private sector doesn't make money from building resilience. We need the multilateral development banks to lend using their existing concessional terms for resilience. And they need to be 3 times bigger. They can get 2 times bigger, just as Richard was saying, just by using their existing capital. But they need to add a little bit more capital too. But that will get us to 3 times more, build our resilience. And then we need the EIB and others to help us to reduce the cost of capital for the private sector coming into these projects. And that's how we'll get to $2.4 trillion a year.
And for that, we have the risk-sharing instruments. So that is also something that has developed over the recent years. And it's true that capital allocation, I mean, if we have more capital, that certainly is going to help.
I think you point to several very important points about how it can be done. I think certainly transformation will not happen overnight, and all of the things that need to change, which you very well articulated, Hannah, are needed. And I don't think there's a reasonable person in this room that expects it to happen tomorrow. However, there are instruments, there are innovative financing mechanisms and programs that are working and that are demonstrating promise and progress. And so how can we scale those? How can we learn from those? How can we adapt them to other environments, understanding they need to be locally driven, contextually relevant, driven by the countries? And so when we think about really leaning into what's working and building off of Avinash, what you said, I'm curious from your perspective, but also Amadou and Hannah, how can we lean into that so that we can really mobilize around that which is known to catalyze that change?
Can I very briefly say, because I know I'm speaking too much, can I briefly say that the biggest thing the biggest help for that is for us to remember the scale. There are hundreds of successful tiny things that will not move the needle. So we have to remember the scale. What is going to get close to a $2.4 trillion number for developing countries? What's going to get close to the mitigation needs, the adaptation needs, and the loss and damage needs? And there are a number of ideas out there that will not do so. So, for example, climate change is an uninsurable event. People keep on trying to sell us insurance. Insurable events are things which are uncertain in timing, they are stable, and we can hedge them, we can spread the risk over time. Climate change is the increasing certainty of increasing loss, increasingly correlated. Insurance is not going to work. Debt swaps are good, they're icing on the cake, but the people who want to give us debt swaps are the people who also give us the lowest, cheapest debt. Swapping their debt doesn't help us very much. It's the very high cost of debt we want to swap, and those people don't want to do it. So there's some things that are there, but they're not really working, and there are other things that do move the needle. We need to focus. That should be the litmus test. Does it move the needle?
And I think what I would add to that is that scale is important, but speed is also extremely important. Many interesting decisions are made that takes forever to be implemented. Look at the SDRs rechanneling directly to countries. It's been decided in Paris. It was in May 2021. The IMF board approved in August 2021. We're still here. In Africa, only one country so far, Rwanda, has received $300 million. We are told some 5 other countries got approval, but when you're going to have the disbursement. So 2 years and more than 2 years down the road, one country in Africa got $300 million. I think Barbados got something, Seychelles, I think, and other countries. So big decision, slow motion in implementing. So this is one. Slow motion also in disbursing. Often transactions are approved in MDBs and others, but the disbursement mechanism takes time. All those conditions you need to meet, which are normal because the MDBs are banks. They're not throwing money out of the window. So you have to tick many boxes. But I think in revamping the system, we gotta look at all those processes. If you were processing a project that the banks call category A, you need 120 days before you can go to your board just to publish it so that the country, everybody is aware of it. Why 120 days? Why not 60 days? Why not 30 days? So these are the kind of things that if we look at them and compress them, I think we can gain some time.
And let me add to that as well, because I think, yes, we are doing things. I'm not saying we're not. Absolutely, there is progress, and things like the debt clauses and also AFDB's activities are major progress. At the same time, this is the moment. We're almost 80 years from the establishment of the Bretton Woods institutions. This is the last, we haven't been on the African continent for annual meetings for 50 years. And I tell you what, when the Kenya's president was talking the last time that the IMF World Bank meetings were held on the continent, which was Nairobi, he was talking about all these shocks. We live in unprecedented, that was his speech, it is an unprecedented time. So every time it is unprecedented, and we have even more challenges now, especially because of climate. So I think this is a time that and I think we also have the intellect within the development community and the climate community to be working on really, really interesting new ideas. We are working on something called the Borrowers Club, a completely new type of financial instrument, completely new. And that is something that we can bring in. We can bring in more of the clauses, we can do the capital increases, but we've always got to keep that scale in mind. We can work on debt sustainability framework reform, which is completely biased against growth fund. I mean, it doesn't even take into account the asset creation that when you invest, when you build a road or you build a railway, you can't count that as an asset in your debt sustainability framework. Absolutely ridiculous. So there's so many simple things, but we have the intellect, we have the time, and we can do it right now while we do everything else. We've got enough people working in this area. We do.
That's a sign of the injustice that people don't really think about. So, people say, we're gonna offer you more debt. But then we say to them, but the IMF's debt sustainability analysis says that we can't accept any more debt. So the IMF's debt sustainability analysis adds all debt up as if they're all equal. So debt that we have incurred to finance resilience that will save us money in the future is considered the same as debt you've incurred for consumption today. So they actually stop us investing in savings, investing in saving livelihoods and lives.
It's a system.
That's the system.
It's
the
a
framework
system is biased
does
against
that.
growth.
That's the kind of injustice we're dealing with, not people saying to us that they somehow don't care about justice.
And in addition to not accounting for the asset creation and asset generation, the economic growth.
Well, that's a bold thing, though. I mean, that is absolutely correct, but that requires a certain leap of creative imagination that is perhaps a couple steps along the way. The first step was simply to say that debt for investment that saves money should be treated differently.
Point well taken. But you also mentioned the cash flow associated
the cash flow of those assets that you are building with debt, those cash flows are not taken into account into the IMF's framework. And we raised that issue. When I became minister in 2019, coming from the private sector, that was the first thing that shocked me. Our first meeting with the IMF in Dakar, this is what we put on the table. In Washington, we raised that issue again, and up to now, nothing has been done. And these are very serious things. It affects your ability to borrow on the market. And then one thing that also is crazy is the rating of African countries. An African country that has the same rating than a country that is in another region, same rating, credit spread difference of more than 500 basis points. You take Cote d'Ivoire or Nigeria against Iraq, same rating, difference of risk premium, 600 basis points. What can you do with 600 basis points times to 1 billion per year for 30 years? It's too much.
And we've not mentioned the politics, which is the elephant in the room, right? So why did Barbados get the SDRs? Why do development banks come to us and keep on offering us loans? Because we're the loudest voice. And we've actually turned down an offer recently when they said to us, we will give you ODA lending. We'll give you lending on ODA terms. IDA terms, so that's the very, very concessional. We are a middle-income country. 70% of the world's poor live in middle-income countries and are not eligible for IDA lending, but that's another source of injustice in the world. So they said to us, we will give you IDA lending. And we said, well, only if you're giving everyone like us IDA lending. If we accept that, you're not changing the system. But that's the politics in the system. So we want the United States to put $1.6 billion of new capital every year for the next 10 years. It will transform the MDBs. We're told there's no money. Well, 100 times that figure has been spent on Ukraine. 100 times that figure. Not 10 times, 100 times.
And the allocation of resources is so important when we are finding ourselves in a geopolitical environment, a political environment where there are these competing interests, but also we are addressing a collective challenge, and this reorientation reconceptualization and rethinking is absolutely needed. You know, we're running out of time, but Ambroise, I'd like to bring you back in to understand, in light of this reconceptualization and the opportunity before us to harness innovative ideas and make needed change that can move the dial. How is the EIB thinking about that, and what can be done?
Well, let me give you one example on something that we have not really discussed yet, which is climate financing. Green bonds. Green bonds are issued mostly, if not entirely, in industrialized countries in the north. They are certainly going to be extremely important for financing projects, especially private sector projects, actually, in developing and emerging countries. So what we have launched is an initiative with the European Union and a few bilateral development agencies in Europe, which is called the Global Green Bond Initiative. The idea is, if you want to launch a market, you need to help it at the beginning. This is what we did actually in Europe at the beginning of the green bond market. We launched that in 2007. We were considered lunatic at the time. What is going to happen is we are going to put a lot of capital on the table for emerging and institutions, financial institutions in emerging and developing countries to issue green bonds that we will buy. So to show that this is something that can work and that you can use to finance excellent green projects. And what we think is that this is the kind of initiatives that's going to help develop the market, develop the interest for green bonds in also local institutions in those countries. And this is with this kind of initiative that we will contribute, I'm not saying solving, but we are contribute to...
But let me be rude, green bonds have failed so far. That the success of a green bond will be whether the yield on green bonds is lower than the yield on other bonds. So by issuing the green bond, we're actually saying because we're doing good and we're doing green, the cost of capital will be lower. But all the evidence has been is the yields are the same. And so the green bond is not making any difference whatsoever.
And also it's additional debt that those countries are taking at a coupon that is much higher than what we need to get from the, let's say, MDBs and other lenders as well. So you know, it's not private sector, pure private sector money going into, let's say, green bond. This is the government's borrowing. It's like borrowing a euro bond. It's about the same.
Not only that, Minister, on top of that, many countries can't access green bonds. They still can't access the private sector markets. They don't have ratings. They don't have those ratings to be able to do that. 23 African countries can't. So, and of course, yes, you can have private entities do that. At the same time, when your interest rate is at this level, at the sovereign level, and at the kind of green bond level, that trickles down. Every single intermediary that's involved is adding on a little bit to be able to get more. And so by the time you get to Mr. Ordinary Wananchi, you know, like me on the street, who's going to try and get something, go and do some new green project if I want to, you know, build some electric cars and all this sort of thing, you know, open a factory. It's the interest rate that I get from my banks is far too expensive for me to be able to do that.
Just Anna, on the green bond, we don't want to kill green bonds. They are very
they're
important.
Good. They're good.
But if I'm told, for example, if I'm a government, if I issue a green bond and the European Union, let's say, is guaranteeing my green bond so that the coupon goes down drastically, then hallelujah, I'll be issuing green bond all the way. But if it's a green bond like a euro bond, my coupon is at 10%, no need. So if you want to make it successful, let's have a European Union or EIB, AAA, to come say, I'm going to guarantee your green bond partially so that your coupon goes down. Then I'll be issuing more green bond and doing more climate resilient projects in my country.
Yes, but this is exactly the idea.
Sorry?
This is exactly the idea.
Fantastic. Let's do it.
And
One more.
we couldn't ask for anything more than from these conversations of bringing different perspectives together, thinking creatively, and being open to hearing what's working, what's not, what are the limitations, and really how can these approaches be refined to be more impactful. And I appreciate your candor, your ideas, and your openness to engaging in that process. And I wish you all the best in the continued work that you're doing.
Thank you very much. Thank you.